Hello, and welcome to Premium Bytes, where we shine a light on the unsung world of insurance technology leaders. I am Sudhar Krishnamachari, one of your co-hosts, and with Samir Ahmed, our other co-host, we're here to have meaningful conversations about the evolving technology landscape inside the insurance industry. Let's acknowledge it. Being an insurance firm CIO or Chief Information Officer is one of the toughest leadership roles in today's world. You've got a risk-averse mindset baked into the very fabric of the industry, a legacy estate that must complement the modern tech, and a talent crisis from both the retiring side and next-gen recruiting side. And then you got the slower pace of innovation. We see it because we're right there in the trenches with you as consultants day in and day out. Our mission is to deep dive, have conversations that carry substance, offer practical insights, and help you validate and navigate the relevant challenges of being an effective CIO in the insurance sector. So thank you for joining us on this adventure. Let's jump right into our next conversation.
Hey, good afternoon, Sudhar.
Hey, good afternoon, Samir. How are you doing?
I'm doing well, thank you. Cold winter
Welcome
day.
back. Yeah,
Yeah,
it's a
yeah,
it's a it's a beautiful mixed winter, I would call it. Cold days, hot days, but looking forward to our episode number 21 on today.
yeah, absolutely. We've crossed the 20 mark. Last episode was on rise of MGAs with David Gritz from InsurTech NY. Actually, it seemed to get a lot of attention on social media, LinkedIn in particular. So if any of you haven't heard it, please take a listen. And then prior to that, we had a review of a BCG report on AI, some interesting things in it. So take a watch or listen.
Yeah, I just want to take a moment to clap for ourselves for this nascent idea that we had almost a year or a little more than a year ago has yielded 20 episodes, and I'm really honored to be working with you on this, and really proud of our you know small part of the world accomplishment.
It is, yeah. I mean, a podcast specifically targeting concerns of insurance technology leaders. It's a small niche, so seems like it's important enough for that group. So we continue on.
That's right. I've done some occasional podcast searches and stuff like that. I haven't seen anyone continue to do this the way that we're doing it. So looking forward to it. So yeah, let's talk about the conference circuit coming ahead.
Yeah, well, we're right upon conferences starting up. Actually, a few Feb events already happened. I didn't go to any of them, but my personal involvement starts in March. I got an event in Orlando. Then we've got some of the InsurTech events coming up, InsurTech NY, Global Insurance Symposium, InsurTech Hartford, Insurance Innovators. So several of these events coming up. I will be attending several of them. Any of you that are attending, please reach out. Let me know. Would love to catch up in person.
Yeah, I might, part of my day job also includes a little bit of health side of things. So the HIMSS one is coming up, at least in my radar.
Okay.
Whether I'm attending or somebody that I know might attend is up in the air, but that's also something that we may not have spoken about in the past, but that's something that I think is also coming up.
Yeah, yeah. I mean, for sure, right? My day job is life PNC for the most part, but we do
I know
health
I expect two
work as
colleagues
well,
attend.
and
Yeah,
the intention of at least when we say insurance tech leaders, it is insurance broadly. So as long as it's under the umbrella, and I think if we get time, maybe today we even touch on something related to health. So we'll
that's
see.
awesome. So I guess today's title is the quarterly news roundup, and like we always do, we looked at the last 4 or 5 months or so. So we're recording this in middle of February, but we looked at it over the last 3 4 months, including January, to see what kind of either a trend or a research report or a news article that would be of worthwhile to call out for our audience. And so I guess we picked 6 or 7 interesting items for us to talk through a few minutes each.
Yeah, yeah, absolutely. I love this format of episode that we do every quarter or so. So yeah, well, where are we starting today?
Maybe we should become a news channel and do this once a month. There's enough happening.
Yeah, that's for sure.
Yeah. So I guess we start off with the first one. Can I kick off the first one?
Yeah, please.
Yeah, so I think we have it on the screen. This one is, I think we have done a few episodes on AI ourselves, and I think we also did an episode on where we kind of did a BCG research dig in on the AI. And this kind of research that specifically digs into the insurance industry and any specific, technology related deep dives, I think piques our interest, and I hope that it will also pique your interest. So this is from the IBM Business Value organization, which I'm pretty sure everybody will be aware of, and they have done a generative AI in insurance industry research. It's a pretty decent, exhaustive 20-page report. Um, uh, Quite a bit of research content and things like that. So we won't bore you with it, but we'll kind of go into the summary one pager that they have, and we'll hit on the 4 things that they're talking about. So the first one, obviously, being that, you know, that there is a need to kind of bridge that gap from what the customer is looking for, or the intermediaries are looking for in terms of capabilities versus what the insurer is thinking and doing. I think that's the second one. um, there is obviously a lot of utilization in marketing, customer service, and things like that, but I think there's a recognition that more value can be derived from the core. I think we also saw this on the BCG one. The recognition that dated legacy technology and need for them to close that gap in order to leverage the data better. And then more importantly, this is the last one around like centralization versus decentralization. I think we have done an episode on this one, overarching at a data and analytics level, but sounds like from an AI standpoint, they're also leaning in more on decentralized capabilities within an insurance company. So I thought to a large extent it's validating, but the deeper research will probably provide more insights if you dig into it.
Yeah, thanks for bringing it up and sharing the summary. I'm glad at least the authors themselves have provided the one page executive summary with the key headlines. Uh, but yeah, the validation of sort of BCG findings in episode 19 that we covered, right? That sure, there's initial opportunity in the peripheries, right? Customer experience sort of oriented processes and use cases, but the real opportunity and value comes when you go beyond that and look at the core of your business. So this report is also surfacing that same, you know,
I thought that you
find.
found one of the data points around CEOs an interesting call out, not in the summary itself, but I think might be interesting
Yeah,
point to at
I
least
mean,
to
so
throw
it's
some a
not in the
wrench in this.
summary. That's right, not in the summary. But if we go back to the actual report, right, right here, they sort of talk about that from a insurance CEO perspective, right? It's almost split down right down the middle, right? 49% think of the risk side of this, while 51% look at the opportunity. So it is an interesting sort of aspect of the report that which side of this do our audience members fall on, and where uh, can we go from here? And of course,
Right.
I think writing's on the wall, right? That
Excuse me.
this is going to change things. So the sooner we move along in this direction, the better off we are. This is not one to resist.
Yeah.
It's more
I
how do
think
we
there's another
incorporate
interesting
it.
point you had identified with the NAMIC article. I think that will connect the dots on, this is as whether they're divided or not, the adoption is increasing and they have a need to find a way to build some of these capabilities, right?
Yeah, yeah, that's right.
Yeah. So that's the first article, and then from there, I think we're kind of going to move on to the second one. I'll let you tee this up, but this is an interesting one.
Yeah, so hopefully it's not news to people, but not everybody pays attention to everything all the time. So in that vein, November issue of Best's Review, right? The cover page pushing back the risk frontier, how insurers are co-opting the InsurTech playbook. So of course, right, these kinds of pieces they pique my interest from an insurance technology perspective. So figured just to bring awareness to it, right? So AM Best TV actually did a sit down with this group of folks that are on the cover, and they did three panels, right? So panel one was how are insurers incubating their own technology. Panel two was new models for successfully incorporating tech evolution in insurance companies, and the third panel was on how some insurers are launching their own evolutionary tech. So there's more detail on this in the AM Best magazine. They have transcript of edited transcript of the panel interviews that are here in written form. It's worth reading this, but I think the real value is going to be in actually watching the panels from AMBS TV. So, like I said, there's three parts to it. There's part two, new models for successful insurance tech evolution. And then part three is how insurers are launching their own evolutionary tech.
Yeah, I think the space continues to evolve. I think to recognize the fact that this was I guess, on the cover of Best seems to imply that there is a desire to, for insurers to think about, okay, what are we learning from InsurTech? Why can't we build what they are doing? And maybe big carriers can, but what about middle and small carriers? So there's some, wider perspective to be garnered from this.
Yeah, absolutely. And it's worth familiarizing ourselves with the commentary. And maybe, right, if any of you are interested, would love ongoing dialogue on some of this.
Yeah,
How much have carriers actually co-opted the playbook and incorporated it versus, well, yeah, it's great for the big companies. We're a small or mid-sized company, and we do well if we keep up with our current needs, let alone
that's right.
launching our
Perhaps
own incubator.
we can offline have an interesting dialogue around the word co-opting being chosen as the keyword here, but we'll leave that for another day and another discussion.
Yeah, yeah.
Awesome. I think from here we're going on to a topic that cuts into, again, AI, but less about AI, more about the blockchain word caught our interest. So this is an HBR article. The title somewhat directly says using blockchain to build customer trust in AI, but I think what piqued our interest is, as many of our audience will remember, we have done blockchain. We've always said that, hey, we're kind of keeping an eye on blockchain. There's no earth-shattering use cases coming out. Obviously, AI is something that we've been keeping an eye on, but this kind of intersected, and the gist of it is that, FICO, the credit scoring company, is using blockchain to kind of build trust automation, if I can use that word, in some ways, by saying that they, in the past they have built an analytical tracking document for internal, data and analytics and machine learning model developers and the business users to document, how they're building the model, how the models is meeting the governance regulations internally, externally, and who's changing what to the models and how the model is evolving and all that stuff. But it sounds like they found an issue where, tracking those changes and finding who's doing what and who's overriding who, and how these changes are being done over the different, attributes and architectural components was difficult. They found blockchain, and it's somewhat of the immutability and the traceability being a great solution for the problem that they had. So they kind of moved that analytical tracking document into a blockchain. Sounds like they're seeing a ton of efficiency and traceability, and perhaps more rigor around people following the governance guidelines that they have internally laid out. I thought this was something that jumped out as that's an interesting use case. So that made me stand out. I'm curious what your reaction is.
Yeah, look, like you, I think some of these, feelers, they go up when these keywords come across the reading. And, of course, Harvard Business Review talking about AI and blockchain tech topics, uh, it piques the curiosity. So, yeah, and I think in kind of further research around this, right, we also found that FICO actually has been winning some innovation awards
I
for this
heard.
work.
Yeah,
So it's definitely worthwhile, educating ourselves around what they did, how they did it. But having read it, right, and particularly going towards sort of um, the key lessons that they learned, I was thinking back to myself that the story is more about AI governance than it is about blockchain, right? And I say that in with the sort of the perspective that finally we have a situation where there's a team runs into a challenge, namely, how do we provide traceability and versioning of models and model design. And so they come up with an approach, and the approach is based on documentation and templates and all of this. And they quickly find that this is a unwieldy process, too much tax on the data scientists to keep it up to date. And so that they find, okay, the process is good. We want to maintain this process. How do we improve it? How do we remove the friction? And so somebody thinks of, oh, blockchain would be a good approach here to solve for the friction. And so they go about building something, and sure enough, they got the value they were expecting. So, if you look at it, right, they have five key lessons here. Number one is start with the standard and the tech second. Number two is it has to be user friendly. And number three is iterate on quick wins, right? So nothing here has anything to do with blockchain, right?
blockchain.
Blockchain actually comes, oh, by the way, it's the approach to implement.
Right.
So yeah, I mean that was kind of my read on it, right? That if I were writing this article, I probably would have come up with a title something like the blueprint for trustworthy AI standards, usability, and governance. But of course, right, there's a reason I'm not a copywriter.
How we
So
may have stumbled on a really worthwhile use case for blockchain.
yeah, yeah. So
Right.
so it's
But
it's
anyway,
interesting, right, and relevant from an AI perspective, right? Anybody that is doing model development, they will run into this challenge, and there are some tech solutions out there, some products that are trying to address this, and FICO came up with this novel, unique approach, so it's worth paying attention
that's right.
to.
Yeah, no, I think some of our rolling our eyes around blockchain in the past aside, I think I definitely think FICO people have done something interesting, useful, and I think it needs to get more attention in the community. So you and I will look to promote this and hopefully have a dialogue outside of this.
Yeah, absolutely. And the other point of relevance, right, is some of our audience members may already be familiar with this. That back in 2023, December of 23, the NAIC published a model bulletin for use of AI systems. And that's slowly over 2024, right, been adopted by more and more states. So here from NAIC themselves, as of 1st of Feb this year, 21 states have adopted this model bulletin, and those are the red ones. And then the blue states, they have their own existing regulations or guidance for it. So half the states have some form of, guidance around AI system development. And by the way, 1 point or 2 points that are relevant, there's a link to the actual bulletin. Folks can read it offline. But they talk about governance, they talk about trust, they talk about building consumer confidence. These all must be aspects of
And
any
I
kind
think
of
they
AI
also
system
talked about
development.
the appetite for the state regulators to, audit the model and the utilization of the models in order to drive decision making and things like that. So it's fascinating.
Yeah, so as carriers get into either adopting or even building their own AI models, these kinds of things around governance are going to become more and more relevant concerns. And so this novel approach from FICO is worth looking into.
That's right. Yeah, no, thanks for calling out that NAMIC. We'll put that link there for anyone to follow the trail.
Yeah.
Depending on the state you're in, you might have to follow the different regulations of the state.
Yeah, the four blue states have their own. The red ones in this map are following the
Right.
NAIC model bulletin.
Awesome. Thank you. Thank you for bringing that up. And I think from here, we're kind of moving back into, I guess, the AM Best and an interesting story that ties back to our very recent episode on MGA, but I'll let you tee this up.
Yeah, so this one, for some insolvent insurance carriers, giving away the pen to MGAs may have contributed to their undoing. So this is a story from Best Review in December, and again, kind of we were talking about the opportunity and the rise of MGAs in episode 20. So it was timely that AM Best came out with a, well, not so fast. Here's the other side of exploring things with MGAs. And so the key thing here is that what they found is that if you analyze the leading causes of insolvency over the last 24, well, they looked 2000 to 2022, so 22 years. 22 of those insolvencies had to do with affiliate programs. And so they started to look into them. Of course, right, catastrophe and fraud, these maybe are not as, eye-catching or unexpected.
Exactly. More
But
more expected. Yeah.
correct, yeah. But, almost 20%, and the third leading cause being, issues with MGAs and affiliates brings interesting perspective. And what they found is that essentially there's too much leeway that the carriers are giving to the MGAs and letting them define programs and giving them too much capacity for them without enough oversight on, is this the right type of risk that we're taking on. So
I think
they
it's an interesting balance, right? We don't know the exact reasons for every one of them, but it is entirely possible that there may be other market driven factors affecting some of these insolvencies at least. So maybe not 100% will be purely to be blamed on the MGA, call it bad behavior, right?
Yeah, that is correct. And even in the article, I think they did do an exploration, right? That well, where was the distribution of the insolvencies where MGA is the primary distributor, and they looked at, well, there is a role of the geography, and sure enough, right, states like Florida and Louisiana, they show up. And so they did a second kind of call out here, looking at the specific situation that happened with four of the Florida based insurers and the insolvencies they went through. But in the end, right, they did conclude that no, these are separate from the true catastrophe oriented issues. And it does actually come down to issues of governance and oversight, or not having enough input in risk selection and things like that.
Another thought comes to my mind, and maybe we won't belabor this any longer. Is like last time when we talked about the growth of the MGAs, we were saying, hey, technology is playing a heavy role. Um, Investment into this is playing a heavy role. Private equity is perhaps going after this. Risk selection is now becoming very niche. So perhaps there's way too much pressure on that growth that on the other side of is leading to some poor choice of decisions, I guess.
Yeah, yeah, and of course, right, things are not always unifactorial, right? Multiple things play into it. So yes, the fact that they were in catastrophe-prone states, and then they did not have enough risk management on top of it, and not enough reinsurance. So it all played into it, but ultimately, the distribution through MGAs was a factor as well. So
Yeah.
anyhow, right, companies that are thinking about this, I think it's just worthwhile to kind of keep a balanced view that sure there's opportunity, but there's increased awareness of the delegation of risk selection that needs to be kept in mind.
Yeah. Awesome. I think from here we're going into a very, very macro topic from nonetheless World Economic Forum. So this piqued our interest. This was a recent report published by WF on the future of jobs report. Normally, it may not have caught our attention, but I think generally speaking, what this report is talking about, it is, it's a fascinating 200 plus page report. So it'll take you probably a whole weekend, but identifies a lot of different sectors where there's growth of jobs, and then identifies a lot of different sectors and even job roles where there's a decline that they're expecting, at least in the next decade or so. But what caught our attention was that in this particular page, I think the top is talking about the growth, or in this particular one, there's a left column with a lot of the job categories that are growing, and then there's a lot of job categories that are on this whole net new decline. And guess what we found? I think we found a couple of insurance related categories. So claims seems like at least in this, based on the data point they have collected, is net reduction. There's some things related to the insurance as well on that. On the positive side, I think on the left, there was something related to risk management that was obviously a net new insurance specific. And then broadly, I think the data analytics, related to all of the software related stuff, not surprisingly, I think is the category that is net expected to grow, and clearly insurance will also benefit from it. Um, We'll touch on two other charts that piqued our interest in this one. Again, it's just confirming what we just talked about is, claims again made it to the top categories within the decline. Again, worth for us to discuss, what aspects of claims perhaps is susceptible to a net decline. Is that the nature of the job, or is it just a lack of interest, etc.? And then there's another chart on page, here. This is a very, very fascinating one where they have charted the different industries against a scale of where they expect a significant amount of automation to happen. And as you can see in the anomaly, looks like an anomaly, is that insurance is on the far right. And I couldn't exactly read the labels of the X axis and Y axis. Samir, if you can read it, I think it might help people put the context.
Yeah, so across the y-axis, right, it's complement and augment workforce with the new technologies. So higher up, they're talking about staffing strategies, workforce management strategies, right, and then across the bottom, going left to right, is degree of acceleration and automation of processes and tasks. And so insurance and pensions management here, far right, is ripe for acceleration of automation of processes and tasks, rather than being in this top left, which is complement and augment the workforce with technology. So this is true displacement rather than modification
Augmentation.
to the job function.
Right.
And then when you piece it all together, right, it's specifically in claims and underwriting, that risk assessment type of functions where this is. I think it's worth also just calling out real quick that the report is based off of survey and interviews of 1,000 or so employers across the world, and they are broken into some of these industry categories. There's probably 20, 25 categories that they covered. So the findings are very much expectations of those people, right? It's not any other sort of analysis or
Not
observation
a
of
deep dive third party. Yeah.
correct. It's self-reported expectations of leaders at these types of companies. And so the other relevant point, right, is that the world's a big place, and when you talk about a world survey, well, population density is in China and India, so you will find findings that are weighted towards those geographies and economies. So not everything is going to be directly relevant for us here in North America, Canada, and US. The report does have a segment where they talk about some of the regional specific insights, and they do get into United States and Canada specifically. And they also have a little bit of the industry specific insights and some of this around insurance. They go into a little bit more detail. But yeah, I think what I took away was that uh, in insurance, yes, we are feeling it and we see it, and others are feeling and seeing it too. That some
Right.
of the routine things, they're going to get automated away, and people's capacity will free up. And so that capacity can go to some of these other areas where growth is expected. And there are some areas that are directly relevant for insurers, right? So we looked at risk management and aspects around that, but they're not the top ones, right? So the top ones You see project managers, these are directly relevant for insurers. And then you see software application developers, which is a category directly relevant for insurers. The other categories are not relevant for insurance, right? Anything to do with nursing professionals or shop salespeople, right? Or farm, just not
No, so
relevant for the
the
industry.
saving grace is that somebody is growing. They all need insurance. So as an insurance industry, we'll continue to grow.
That's right, yeah. And I
Yeah,
mean, less tongue in cheek, right? While we do call out that, hey, claims adjusters show up as a large declining, category, it's bottom of the pack, right? The bigger decline is somewhere else.
yeah, that's
Uh,
a saving grace. But I know maybe we have a few more minutes to ask. I'm going to ask you this question that we've always talked about how insurance is data intensive and tech intensive from the day one. It's about data, it's about risk, it's about analytics and all that stuff. Perhaps insurance is also one of those industries where, to a large degree, there's more rules and it's rules based and it's very, very clear cut on what needs to be done for A, B, and C. There's very little of create. It's not like, making a movie or writing a script or creating some animation or whatnot. So perhaps there's a general expectation that a lot of the work inside an insurance company, inside claims and underwriting, could be automated because it's very rules driven.
yeah, yeah. I think it's a valid observation and point that the opportunity for augmentation is in areas where creativity is required, and when aspects are pretty much rules based and with regulations for having filed factors and filed rules and eligibility criteria, rating criteria, all of these things. Um, yeah, it is ripe for just good old automation, whether it's through AI or not. That is not surprising. But flip side of it is, where is the creativity? Creativity is in identification of new, uh, you know, um, risk points, in creating products that cover for those new risk points, coming up with new approaches for pricing, product development, right? So these are areas where the growth is going to be, and it shows up here in their findings and expectations of the leaders.
Yeah. Yeah, so maybe with that we can kind of wrap up our news roundup for the day. Many of these are worth digging in, so we will put some of these links and we'll ask folks to, offline react to us. But hopefully, these are very different kind of news articles and items that we're bringing forth to you guys. And, hopefully many of them are some things that either you haven't stumbled or even if you have stumbled, you haven't really dug in. So we look forward to hearing back on your feedback on this.
Yeah, and if you come across anything, send it our way. Would love to take a read and maybe watch or listen. And if you find something that in the future we should cover, send those our way as well. Happy to include it in our next roundup. We'll do another one of these in 3 months or so.
Yeah. Yeah. Until then, please like, comment, and subscribe and engage with us. And we look forward to seeing you on the next episode. Thank you.
Thank you.
And that's a wrap for today's conversation on Premium Bytes, where we shine a light on the unsung world of insurance technology leaders. Thank you for joining us on this adventure and being part of our community. Don't forget to like, comment, subscribe, share, and follow us. Until next time, take care.